Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. An immediate countering bearish dark cloud cover pattern yesterday with a new high not seen since mid-March. The base of the action was on the 50% Fibonacci line for 2023 at 108.64. And topside we have the 50% Fibonacci line of the January 2021 September 22 move at 109.44. Overall, we are starting to move up and away from the recent break up and out of the bright red bearish shift pitchfork, but it is a tortuous process right now. We're also now within the dark blue highlighted mid-April to date ascending expanding wedge pattern, currently 107.73 to 110.63. Now this ascending wedge pattern is quite interesting as it has been since mid to late April the transition pattern for a move out of the bright red bearish shift pitchfork. There are two other factors I'd like to consider. Firstly, we have a bow tie formation made on Wednesday 2 weeks ago of the short moving average, currently 108.47, the long moving average, currently 107.86, and the short medium moving average, currently 107.78. Now, setting aside the fact that the moving averages went in and out of the bow tie formation in the wrong order, I'm more concerned by the lack of response of the short medium moving average and the long moving average. They are both flatlining, which leaves the short moving average as a driver in this pattern, and that is not satisfactory. I'll ponder upon this some more. Nevertheless, the theory suggests that between 15 to 20 sessions after the crossover, we may see a period of volatility and possibly a move begin to start. So that would be between about the 12th and the 19th of June. So watch out. Secondly, last week was a weekly key reversal down, and we have seen a rejection of that with these new highs. All that being said, we have a possible small bullish halfway hesitation on the cards, formed since about the 9th of May. If this comes about, then we have a topside target X in the 109 3/4 area. So far today, well, not much. As a small move down, but still held up by that 50% Fibonacci line at 108.64. Cable, aka sterling against the US dollar. An immediate countering bearish dark cloud cover pattern yesterday after, well, despite a new high, not seen since mid-March. And that's after the previous sessions combined key reversal up, bullish engulfing pattern, and bullish closing white Mariposa. The fall yesterday punched down through the bright red highlighted July 2021 to date downtrend, currently at 127.59, before a pullback up and close right on the breach downtrend. Further down we have the combined 50% Fibonacci line of the June 2016 to September 22 move and the September 2020 low, both at 126.99. Now looking topside, we have the November 2020 low at 128.52. Overall, we are still traveling within the dark blue highlighted April-based bull channel, currently 126.64 to 128.63. We also have on the top side the secondary hard to reach target X1 up at 128.95 for the early March to mid-May bear channel. The primary target at 128 even has already been reached. So far today, well, an interesting reactionary move higher, though limited. The move higher is based on the bright red breached downtrend. Euro sterling. A fourth bullish white soldier yesterday, though it is still within last Friday's overall range. However, it was a stronger close, up and away from the bright red neckline, currently at 85.12, of the May to August 2022 head and shoulders continuation pattern. Overhead, we have the combined resistance of the December 2022 low at 85.45 and December 2023 low at 85.47. Whilst below the bright red neckline, we have the lows of mid-March and mid-February between 84.96 to 85.02. Overall, we're still below the lower purple highlighted trend line, currently at 85.50, of the late January to late May expanding wedge pattern. And though we seem to be currently hesitating, it is still a significant move down. The question now is whether the move lower will continue to be exploited, especially on a closing basis. The moves down have been enough for me to set up some potentials below for the purple highlighted expanding wedge pattern. Thus a primary target X will be down in the 84.51 zone and a secondary hard to reach target X1 down in the 84.13 zone. And so far today, a reactionary opened lower and prices punched down through the bright red neckline again, though not much further. US dollar against the Japanese yen. A second bearish black crow yesterday and a significant move down below not just the June 1990 high at 155.78, but also the dark blue lower time currently at 155.01 of the recent mid-March to early May bullish Andrews pitchfork. Prices halted at the rising short medium moving average currently at 154.55, which was just below the lower time and acted as a support to the time, eventually closing right on that lower time. Overall, we are still between the purple highlighted middle time above, currently at 161.42, and the lower time below, currently 147.33 of the large February 2022 to January 2023 bullish shift pitchfork. We're also in between the middle time above, currently at 157.36, and the lower time below, currently 154.46 of the bright red July to December 2023 bullish Andrews pitchfork. So far today, a strong reactionary move back up from a slightly lower base, up over the dark blue lower time and the June 1990 high, and looking very much like a potential bullish engulfing pattern and possible pipe bottom right now. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top yesterday. There was also a second bearish black crow. Prices dropped down through the short medium moving average, currently at 724.73, and down as far as the dark blue highlighted upper trendline extension to the January to April ascending triangle, currently at 724.03, before pulling up to close, and the short medium moving average as well. Interestingly, all this action was within the previously mentioned approximate 724 to 727 congestion area. Further down, we have the flatlining long and medium moving averages, currently 723.32 and 722.70 respectively, whilst topside, we have the high from last week up at 727.58. So far today, a reactionary move higher today based on the dark blue upper trendline extension. The market is seemingly not happy about testing down to this, not right now. US dollar against the Mexican peso. A second bullish white Mariposa yesterday after the previous session's combined bullish engulfing pattern and bullish long white Mariposa. Prices this time base themselves on the combination of the dark blue middle time, currently at 1761.51, of the early April to mid-May bullish Andrews pitchfork, and the August 2017 low at 1756.93. The topside was capped on a closing basis by the green highlighted neckline extension to the January to May 2021 head and shoulders top, currently at 1785.58, though the peak of yesterday did almost reach up to the dark blue upper time, currently at 1835.40. Overall, two things to keep in mind. Firstly, I've drawn a March to May bright red diamond pattern type on my daily chart. Last week, prices broke out through the bright red upper downtrend of this pattern, giving us some potentials topside for this pattern. Thus, we had a primary target X up in the 1753.40 area, for hard to reach secondary target X1 up in the 1784.20 area. Now, target X was reached on Monday, and target X1, the harder one, well, that was reached yesterday. So it's time now to see what the next pattern will be. And so far today, a reactionary move lower straight from the start, with prices capped by the green neckline and dropping down to test the middle time and the August 2017 low.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.